Welcome to the tokenized economy. In today's explainer, we're going to tackle a really critical question. What happens to things like governance and shareholder rights when stocks get tokenized and moved onto the blockchain? Let's dive in. So, if you've been following along with us, you know we've been building out this pretty detailed picture of how tokenization is shaking up financial markets. We've talked about how companies can issue shares directly as tokens, how you, the investor, can hold them in your own digital wallet, and the role of these new digital transfer agents. But all of this amazing progress leads to one huge question. When a share becomes a token, what actually happens to the shareholder's rights? Well, today we're going to tackle that head-on. We'll start with the governance challenge itself, then look at a landmark announcement that offers a real solution. We'll see how it extends the market infrastructure we already have, explore how on-chain voting actually works, and finally, we'll talk about why governance is really the ultimate test for this whole tokenized economy. So let's kick things off with the core of the problem. You see, when you own a share, you own more than just a number in a database. True ownership is all about having rights. And without those rights, a token is just, well, it's just a digital collectible. And this is an absolutely crucial distinction. Owning a share isn't just about saying you hold a piece of a company. It's a whole bundle of legally protected rights. We're talking about the right to vote, to get dividends, to take part in corporate actions, and to get key communications. And regulators are crystal clear on this. If a token represents a security, it must carry these same rights. Tokenization doesn't get a free pass. To really get why this is so tough, just look at the system we have today. It's complex, to say the least. You've got registered owners on the company's books, and then you have beneficial owners whose shares are held for them by a broker. And a lot of the time, the legal title is all bundled up in a central structure, like Seed & Co., just to make trading easier. There's a massive infrastructure layer built on top of all this, just to make sure every single investor can actually use their rights. Now, tokenization comes along and completely changes this picture. Shares can now move out of those traditional layers and go straight into an investor's personal digital wallet. And while that's awesome for bringing ownership closer to the investor, it also creates a brand new problem. Ownership is now fragmented. It's split across the old system and this new on-chain world. So here it is, the billion-dollar question. How do you make sure that an investor's rights, their vote, their dividends, move perfectly with their share, no matter where or how they decide to hold it? Because if those rights get disconnected from ownership, well, the integrity of the entire market is at risk. But here's the good news. We're not just here to talk about problems today. A major piece of the solution was just announced, and it marks a huge milestone for the whole industry. Broadridge Financial Solutions just announced that on-chain governance for tokenized equities is now officially live. And get this isn't some little pilot program. It includes the first ever implementation of on-chain proxy voting for a U.S. public company, the NASDAQ-listed firm Galaxy Digital. This is a massive step forward. So, how does this new system actually work? Well, the most important thing to understand is that this isn't about replacing the old infrastructure. It's about extending a trusted foundation to handle the future of digital assets. What Broadridge has done is extend its existing globally recognized governance infrastructure into these new tokenized spaces. The platform makes proxy voting possible across both your traditional shares and your tokenized ones. It integrates corporate actions into the workflows people already use, and it supports the entire ecosystem, from the companies to the brokers, all the way to you, the end investor. I really want to pause on this point because it's so important for market confidence. This is not some separate parallel system that's just going to create more fragmentation. No, instead, it's a direct extension of the trusted market infrastructure that has powered governance in capital markets for decades. It's all about taking what already works and making it work for this new on-chain world. Okay, so how does this actually work on a technical level? Let's pop the hood and take a quick look. The process is actually pretty slick. First, the proxy votes get recorded on a blockchain based on Avalanche, which creates this transparent, verifiable record. Second, that voting data can then be sent out across different blockchains if needed. And third, Broadridge's well-known proxy vote platform now connects directly with digital wallets, so investors can get their meeting materials and cast their votes right from their wallet, on-chain. But of all the cool technical innovations here, there's one capability that stands out as maybe the most critical of all, especially for the companies that are issuing these shares. It's this idea of a single pane of glass for issuers.
The platform consolidates all those different layers of ownership we talked about, registered, beneficial, and now tokenized, into one single unified view. And what that does, crucially, is ensure that no shareholder is ever disconnected from the governance process, no matter how they choose to hold their shares.
All right, let's zoom out and look at the bigger picture for a second. Why is solving this governance puzzle so fundamental to the future of the entire tokenized economy? Well, for decades, Broadridge has provided the core infrastructure that powers global markets. We're talking proxy voting, investor communications, corporate actions, you name it. This announcement is basically them signaling that this same essential trusted infrastructure is now extending to cover the new world of tokenized securities. You know, when people talk about tokenization, the conversation usually revolves around trading, or faster settlement, or programmability. And yeah, those things are important. But the real test, the thing that makes a market actually work, it's governance. It all comes down to trusted ownership, rights you can actually enforce, and the ability for companies to reliably connect with their shareholders. Without that, everything else is just noise. And that brings us to our final thought. Tokenization isn't just a tech project about putting an asset on a blockchain. It's about making sure that ownership, all the rights that come with it, and the entire market structure all evolve together in lockstep. What we're seeing right now is that critical governance layer of our capital markets finally extending into the tokenized world. And that's our explainer for today on the tokenized economy. Be sure to subscribe for more short explainers on blockchain and financial markets. And please, drop any questions or topics you want us to cover in the comments below. We'd love to hear from you.